Okay, so we are live again with our sixth panel of the day. For some people, it's morning, right, Dante? Good morning. And for other people, it's the afternoon. So I'm very happy now to welcome the next panel who's going to discuss the use of blockchain in cross-border payments. So, Jón, I'll pass the word for you.
Hi, everyone, and thank you, Victoria. So my name is Jón Egilsson, and I will be the moderator for this particularly interesting panel discussing blockchain's role in cross-border payments at this European Blockchain Convention. I'm going to ask our panelists a series of questions, and I know they're up to a task. But before we get to that, I'm gonna encourage you all that are participating virtually to provide feedback, provide your insight and questions in the chat. We will try to incorporate, as best we can, your feedback into our discussion. So the issuance of stablecoins has grown from almost nothing 2 years ago, which equals decades in blockchain years, to roughly $20 billion today. Everyone is thinking, what is this new optionality of tokenized assets, including tokenized currencies? What is it capable of achieving? A tokenized asset on a decentralized network knows no geographical borders. And although today we make a distinction whether old-fashioned physical mail is sent domestically or cross-border, we never say, oh gosh, this is going to be complicated and expensive. We need to send a cross-border email. We never say that, do we? So in a similar fashion as email transformed the way we use the postal service, the banking and the financial services are being transformed. Tokenized assets can now be shared by anyone on the planet. Anyone can participate from a technical point of view, just as easily as using email. This is a game changer in finance. Our objective today is to share some of the thinking about blockchain's role in cross-border payments, what it means for the general public and businesses, why it is important, where we stand, what is missing, and how this is likely to evolve. We are very fortunate today, and we could not have asked for a better panel of speakers to discuss this important issue. We have Dante Disparte, the Vice Chairman and Head of Policy and Communications for the Libra Association. You may have heard about Libra. It was initiated by a small company called Facebook. We have Robert Vieco, the lead project manager within the decentralized DAS project. As the saying goes, DAS is digital money that is better than cash. It is instant, global, and easy to use. We have Julio Faura, the CEO and founder of Adhara, and the founding chairman of the Enterprise Ethereum Alliance. Adhara is offering world-class solutions for payments for decentralized financial networks. And we have Bo Hembeck Svensson, a business developer, entrepreneur, initiator, and strategist, TED speaker, and as he likes to say, a citizen of the United States of curiosity. Welcome all, great to see you. I'm the moderator today, but I'm also representing Monerium as their chairman. Last year, Monerium became the world's first e-money institution allowed to issue national currencies on blockchains. Monerium now offers the euro, the US dollar, the British pound as e-money tokens on blockchains in all of the European Economic Area countries, including the EU countries and plus the UK, since we passported our license before Brexit. If I start with you, Julio, please tell us your thinking about the role of blockchains in cross-border payments, what it means, its potentials, and what is the final destination here? And if you don't mind, provide some context to what Adhara is.
Yeah, thank you. And thanks a lot for having me here. And hi, everybody. Well, just Adhara, we are a startup company. We essentially provide liquidity management and FX and international payment solutions for banks and regulated institutions that are based on the concept of tokenized money. we call it tokenized money. We don't call it stable coins or things like that. Signaling what I would first say, and this is that at least as a first stage, right? I mean, I really admire all of you guys, but in my whole banking world, things are a little bit more boring, let's say, right? I mean, this thing about banking ledgers and so on, it's never been so fashionable, but the truth is that it's not that exciting, in the sense that what we are trying to do essentially is to apply at least the first lessons that we can get. I mean, the first benefit that we can see from blockchain technology that can enable a lot more revolutionary uses and cases like the ones you guys are doing, right? So we're just trying to use those principles to provide financial institutions with a better financial infrastructure, right? In tokenized money, we call it tokenized money in the sense that 97% of the money's world is created by banks, right? And it's already electronic. It's just that it lives in banks' ledgers, right? And banks' ledgers have not been built to be interactive. They're not been built to be programmable. They have been built to be secure. When you want something to be secure, you essentially put it on a safe. That's what we've done in the financial industry, right? There's no good APIs, no nothing, because banks are very, very risk averse. So the possibility of creating that money with the same legal construct, which is just a bank account, right, or an electronic money account, or a central bank account, but using a smart contract on a decentralized ledger is very interesting, because it can use the same security model as we have in cryptocurrencies and tokenized, stable coins and all that, but applied to tokenized money. So that is what we mean by the first step, which is the settlement layer, right? We essentially, banking systems do need a settlement layer, somewhere where to exchange value, right, between different banks, right? That's the first step. The second step is creating the business applications, for example, payments. One of the main problems with international payments today is that they don't exist as digital objects, right? They're just a bunch of messages when a bank, and again, I'm talking a little bit more about banking payments, right? Which are, again, by far the biggest majority. So essentially, when we want to exchange a payment, you have to do a lot of messages and all that. But if you ask, what is the status of a payment, you get different responses from different banks, right? There's no a single truth of the status of a payment. And with blockchain, we can actually produce that, right? We can create payments as single digital objects by using smart contracts on a decentralized ledger that is accessible by everyone, or at least by everyone that would be permission. So I think the first lesson is that the coupling between the business applications, the payments layers, right, the payments networks, and the settlement facilities. I think in terms of settlement, we are starting to see very, very interesting developments. One is finality. Something I didn't say is that Adara is the core blockchain partner for finality. So we build the core technology for that. Technology-wise, is similar to the stable coins and the things that you guys are doing. But instead of using a banking collateral, we would use a central bank collateral, and instead of being issued by an unregulated actor or an electronic money actor, it would be regulated by as finality, but by another construct like that. So this decouplement, I think, is quite important. The settlement layer is now very coming into fruition quite quickly. Finality is a good example. Central CBDCs is also something that is becoming quite advanced and quite interesting over the in the past months, and then that will enable the next step, which is creating these payments networks using these things for settlement. And finally, just to open what is really exciting is that these things, at least technically, if we follow the same standards, which we can, then would make things a little bit more compatible. So we could see like payments starting in a stablecoin, for example, and finishing on a bank account, tokenized money or non-tokenized money, who knows, right? Because what I do think is that the financial industry as it is, I mean, the financial infrastructure as it is, it will stay, at least for some time, until we collectively can make it evolve. It's not something that is going to change from tonight, right, or overnight or something like that. Yeah, that's what I would say to start.
Thank you very much, Julio. Now you mentioned a fact which is many don't realize which is that 97% or 98% or whatever of the money of the world is commercial bank money created by banks. And the focus of Atara and Finality is on the financial institution, as you said. Now, if we turn to Dante, then that's maybe a little bit different approach. So Dante, if you could please tell us your thinking about the role of blockchains in cross-border payments, what it means, its potentials, and what is the final destination. And if you don't mind also, provide some context what Libra is and the status of it for those who might not be familiar with the initiative.
Sure. Well, thank you, Jón, and I'm grateful, of course, to Victoria and her team for putting on the conference. A good sign of resilience. It's also a good reminder of what we can and cannot do today with technology in the midst of a pandemic that has ground the global economy to a halt and has stopped anything looking like normal. It says a lot that, but for technology, we wouldn't be on today's conference. But for technology, hundreds of millions, if not billions of people wouldn't have access to telecommunications and the information age. And yet, I think as Juan just pointed out, we have a financial system that goes to sleep, that works 9 to 5, Monday through Friday, and occasionally enjoys more bank holidays than we can all count. And so maybe to situate my remarks in the cross-border case study or the use case of blockchain payment systems in a cross-border environment, it's useful to think about the fact that, this month marks the 75th anniversary of the United Nations. And one of the sustainable development goals has a call out for reducing the cost of cross-border remittances from the current stubbornly high 7% to 3%. And so we live in a world where we're very, very heavy on problems, very light on solutions. And so I think one of the best case studies for blockchain and best case studies for the type of innovations that Juan just spoke of is to figure out how to remove the friction and increase the speed and certainty of those cross-border payments. In 2019, this is a figure greater than $700 billion a year, peer-to-peer cross-border payments. It's a figure greater than foreign direct investment. It's a figure greater than official development aid from governments and multilateral institutions like the World Bank and others. And yet, at the corridor of most of those remittance payments, you have very little actual competition. And so what ends up happening is we have a financial system where people who could afford it the least pay the most for basic services. And that, I think, in the context of a pandemic, where we're all being instructed to stay at home and we're all under quarantines and social distancing requirements, adds an additional insult to injury in terms of penalty on poverty. And so part of what the Libra project is all about, and frankly, I think what has motivated me personally to be deeply committed to this vision and mission, is to empower people. We live in a world with 1.7 billion people without access to the formal banking system. Yet, of that number, roughly 1 billion of them have access to an internet-connected mobile device. And so aspects of what we've been discussing so far and what Julio opened up with are the ability to effectively turn an internet-connected mobile device into a regulated, compliant payment endpoint. How that is done over time will evolve, but that it is done, I think, is an urgent priority, not only that is in line with the public sector, but it is in line with a range of human needs that will consistently go unmet. And so a lot of people have tried to focus on what would the risks be if blockchain-based payment systems began to evolve. In my world, I'm deeply concerned about what would the risks be if we did nothing about these very insidious rates of unbanked and underbanked populations. And make no mistake, this isn't singularly an issue for developing and emerging countries. If you were trying to make a payment across borders in Europe or from across the Atlantic to me in the United States, you would be starving for choice. You'd be hard-pressed to find reliable, ubiquitous pathways where you could transfer value with the same ease with which you could transfer information today. And so that gap is part of what the Libra project is all about. We also realize that it's not a gap that can be filled by any single actor, which is part of the reason the Libra project has stood itself up as an association or a consortium model. And then the second layer behind that, of course, is to build this on a blockchain that is open source and in the public domain, enabling effectively digital commons to start to evolve. So our payment systems are stuck in the 1950s, yet our technology, our telecommunications and internet and other systems have evolved and are now in the 21st century. Part of what this is all about, I think, is not about competing with the existing system. If anything, it's about completing it.
Well, thank you very much, Dante. This is very interesting, and it's an interesting question that you pose, asking, what is the risk if we do nothing? Because it's not like we have a perfect system today, and there's ample room for improvement, I think. And also what you mentioned about financial inclusion, which is of course very important, and how that links to the Sustainable Development Goals of the UN. So if I may, Dante, just because a few days ago, the European Commission put forward the proposal for a stricter stablecoin regulation, which actually refers to e-money tokens, not of stablecoins. So a similar remark as Julio had. So this comes amid the rise of various stablecoins and Libra being among them, and the regulators are obviously concerned about the potential mass adoption, and as such rather want to be safe than sorry, I guess. So among other things, which is proposed in this proposal, a legal proposal, is to only allow stablecoins or e-money tokens by an institution in the union, either as a credit institution or an e-money institution. So I'm interested, Dante, to hear just briefly your thoughts about this new EU proposal, if you have been able to look at it, and what it means for Libra, and also in maybe a wider context. I mean, does this show the need for a global standard and that global governance, or we are just okay with jurisdictional silos?
Yeah, no, so thank you, Jón. Of course, I'm following, as you might imagine, all of the developments, regulatory and otherwise, around the world in this asset class. And I too would advocate that we desperately need as a planet to begin harmonizing regulatory standards and consumer protection standards around the world for this asset class. One of the things I think that Libra has done as a positive externality is we've convened the world's attention around the opportunities of digitization, virtual assets, and others, and including groups like the Financial Action Task Force, over to the Financial Stability Board and others, where we have been very deeply engaged in trying to understand that financial inclusion, responsible financial services innovation, and compliance are not competing forces, but that in fact the three things rather can work side by side. I have also, of course, tracked the developments in Europe, and I think it's laudable of the Europeans to begin creating a framework that is that harmonizes standards across the market, and it fights this trend of balkanization, if you will, of the regulatory regimes. I think that aspect is vitally important. But of course, it warrants more study. This is a body of work that isn't yet enshrined in laws in your region, and so as it is, of course, the Libra project will ensure that as the network becomes available in the EU, will abide by those regulations. My only caution, of course, is that for this to work in a cross-border setting and not to get into conflict of law issues, we really need to continue working on harmonizing rather than creating regulatory arbitrage. Too much crypto investment and crypto innovation over the last decade has found the path of least resistance, which often puts the regulatory regime for lack of a better term, in potentially risky jurisdictions. And I think the more we begin to harmonize regulatory standards around the world, across the Atlantic and elsewhere, the better. And to that end, I'm eager to consistently engage with EU authorities and others on those developments.
Thank you very much, Dante. Most interesting. So if we move to Robert, so if you could please tell us, what do you think is the role of blockchains in cross-border payments? What it means, what is the final destination here? And also, if you don't mind, a short context to what Dash is.
Sure. Hey, hello everybody. My name is Robert Więcko. I'm COO of Dashcore Groups, which is a software development company behind Dash. And Dash is a cryptocurrency designed for payments. We have created cryptocurrency in 2014 that was at the very beginning a kind of clone of Litecoin, Bitcoin, and then built up some functionalities that are crucial for the payments, like, for example, instant confirmation of the payment, very low fee. That is becoming a problem nowadays in the blockchain or crypto space. Basically, Dash transaction cost is below 1 cent, which is very attractive. And we are excited right now to provide more and more functionalities. We are expecting the next release really soon in December, where we will deploy and provide Dash platform together with the wallet, with username, very convenient. So we are providing new tools for developers, and at the same time we are providing the new wallet, very user-friendly wallet for our customers. That will be very in terms of usage and user experience will be very similar to PayPal, which I guess is pretty exciting because cryptocurrencies are difficult for an average person. This is a nightmare sometimes. So we are enhancing user experience. What is the future? I have no idea. I don't think anyone can answer this question. This space is evolving so quickly and rapidly, and new projects are appearing. Some disappearing, new exciting things are being built. So I have no idea. However, as you said, or Julio said, this could be a game changer for the payments industry. I fully agree with what Dante said about the chances that blockchain itself, crypto, provides for people around the world. We basically, at Dash, we are, let's say, on this part of the industry that is less excited about regulation and more, let's say, compliance measures and a regulatory regime introduced to the crypto space. However, we understand the necessity of it, and I think that the major goal for us is to create an alternative to the finance industry that is not perfect. Sometimes it's failing. Like an excellent example is Venezuela, where people were left without any access to financial systems, and they are struggling since a long time. And cryptocurrencies are working great. They have given them an opportunity to trade, to exchange the money, but also Dash and other cryptocurrencies serve well as a remittance. Many people went to the other countries in Latin America, in South America, North America, and they simply can send money to their homes thanks to the technology like blockchain and cryptocurrencies, because those people are most of the time really poor people. For them, for like us, right, in the Western world, to send a bank transfer from one country to another, which costs like $5 or something, is affordable. For them, they earn like $5 per day probably, or something like this. So for them, it's a huge burden. So they use cryptocurrencies, and it's great. And also, the entire population that is unbanked around the world, these people, most of the time, they do have these small devices, and they can use them as a transfer protocol, or to transfer money from place to place, to trade. And it opens a lot of opportunities. So I'm super excited about the future of cryptocurrencies and blockchain. I'm super excited about the future of this entire industry. And I think, the alternative that we can build cannot be underestimated. It's simply something fantastic. It's fantastic, and I'm very excited about this discussion as well. Let's talk about it. Thank you.
Yeah. Thank you, Robert. I mean, this is so it's interesting. In the panel, we have these two views, where one is more geared towards the financial institution and the way things are done now, and using blockchains to improve that. The other is basically doing cryptocurrencies, and to me, it sometimes feel like we're living in two parallel universes. So one is the old world, and then the new world, the decentralized finance world, where we see new things like yield farming, like liquidity pools, with all kinds of experiments and doing things differently, which I think is really valuable, and just shows how we can change things. And if you would And I guess a part of that experimentation is that this is, shall we say, this crypto world has been allowed to develop without too much regulatory burden. But I would like to ask you the same question, Robert, as I asked Dante about this new proposal by the European Commission. I'm not sure if you have, I mean, this is really relatively new, so I'm not sure if you have seen that, but will that change anything for Dash, this new regulation, you know, this proposal, and in that proposal they are saying that crypto assets like stable coins, they will have to be regulated as e-money.
Well, I must admit that I did not read the proposal, so I don't know too much about it. I simply heard your opinions, but I don't think it changes anything to Dash. Dash is not a stable coin. Dash is not a kind of commodity or security. So I don't think it will introduce too many changes. Let's wait what is happening. I hope that, you know, the European Union will work not only with regulators and banks and financial industry, but also they will invite us, the crypto industry, to the table, so they can create a really useful and valuable regulations and laws for the entire industry. Well, I think that, you know, politicians and let's say lawmakers started to understand that nowadays this crypto movement, let's say, is becoming more and more important. Not only important for an average person, but also important for the financial industry, for the industry, IT industry in general. We have introduced a lot of innovation during the last 10 years, and we can introduce even more if, you know, extensive regulatory burden will appear. It will stop this innovation, or, you know, it will go underground, which would be a pity. So I hope that you know, this new law, this new, let's say, the outcome of this work will be in favor of everyone.
Yeah, thank you, Robert. I mean, this is crucial, and I think in general over the last many years that I've been following this development, we have seen that regulators mostly acknowledge and understand that too heavy regulation at this stage can simply stifle innovation, which is not good for anyone. So, Bo, if you could please share your thinking, what you think is the role of blockchains in cross-border payments, and what does it mean, and what is the final destination here?
Absolutely. I'd be happy to, and I'm happy to participate in this panel with such great minds. That's really fantastic. So let me first say that I'm a strong believer that smart money or programmable money is here, and it's just not evenly distributed yet. And with it comes thousands of new use cases and probably billions and trillions of new transactions. And I think it's really important to remember that transactions is the heartbeat of any economic system. And what we're looking at here is technologies that allows us to do things that we actually couldn't do before. So my overall take on blockchain and DLT is that it's emerging as the next protocol of the internet. And therefore, the internet will provide us with trust, transfer, and settlement at the protocol level. And I think that if there's one thing that is really important to understand about these technologies that we together call blockchain, I know there's a lot of discussions, you know, about the nitty-gritty stuff, but on an overall basis, I think it's really important to understand what trust, transfer, and settlement really is, because it is what lies at the very foundation of any kind of process that we engage in. So, and that's also, by the way, why I 5 years ago was totally hooked when I finally got to understand what is actually happening on this scene. So what we are looking at here is that the internet protocol will provide us with the tools that we need in order to be able to manage identity, supply chain or resource transfer, and payments, which these three, identity, supply chain, and payments, are the three basic super use cases of blockchain. And of course, the question is, of course, when, and also what is going to drive this. And I would say that the resistance that I have seen, intellectually and politically and so forth over the last 4 or 5 years has really waned a lot recently. And of course, the looming fiat money crisis we're looking at right now is also accelerating this. And at the same time, we see technologies mature, and we see some really interesting systemic initiatives such as open banking, APIs, open finance, open data, etc. So I think that what we are looking at is that some very important sort of mega developmental and political trajectories, they're starting to converge and come together. And of course, when they come together and comes full circle, then things happen, and then it has a tendency very often to accelerate a lot in the last part of the curve. So I think that a lot of really important stuff is going on. And I also think it's very important when we discuss all this to remember that there's no difference between asset classes from a technology point of view. So all the initiatives we're seeing, not only within programmable money, but also with all the other asset classes, they are also coming together and converging. Obviously, this development and this technologies has been embraced by the financial systems. So wholesale and cross-border, escrow, etc. Of course, some of the most obvious and interesting use cases, which is why we're seeing there's a lot of focus on that right now. I would say that in a general sense, that to make smart money or programmable money, to make that happen, what you need is end-user reach. And of course, the moment that billions of people, they have what you could call a crypto wallet or an app that can manage this and also manage their identity, well, then I guess we have shifted towards programmable money. And one thing that I think is extremely important to also have in mind in order to get the huge impact that this is going to have is that at the end of the day, trust transfer and settlement is about resource allocation. And what we do as societies and banks and businesses has a lot to do with resource allocation. And blockchain is actually a tool that enables us to do resource allocation faster, cheaper, and probably also much more transparent than we do today. So I have a vision about programming money coming, and I'm sure that this is going to develop into become one of the most important political tools that we have seen in a century. This is much more than banking. This is about how we allocate resources on a global scale, on a national scale, and on an individual scale too. So I think that very important developmental trajectories are coming together right now, and we're actually seeing that starting to reach, you can say, the eyesight of the public and the global audience. And I think that one of the very important things that is driving this is definitely the Libra project.
Okay, thank you, Bo. I mean, this is very interesting, and I like to I like what you said, that you think this might be the most important, more important than banking, which I absolutely agree.
Yeah.
You also mentioned that this is also about removing the need. Blockchain removes the need for a trusted middleman.
Yes.
Which is changing a lot of things. And I like to use that and also build on Dante's point about financial inclusion and how this plays into the developed world, because bank accounts are not only cumbersome, they're expensive, but they also exclude, like Dante said, billions of people, leaving them unbanked and underbanked. But I would like to add to that even for those fortunate that have bank accounts, they are not really in control of their own digital money.
No, not at all.
And I say this with a little context as a former chairman of the supervisory board of the Icelandic Central Bank.
Yes.
Post 2008 crisis, I should add. So a bank deposit is essentially a loan to your bank So deposits are banks' debt. It sits on banks' balance sheet as debt, and that is in itself a potential source of financial instability and systemic risk. We sometimes forget that. And over the last 50 years, we have witnessed 796 episodes of a currency depreciation of more than 20%, and 235 episodes when it was more than 50%. That is not financial stability in my mind. So obviously we can do better. We can improve the current system. Now, we accepted this arrangement of the current system in the old days because we needed a centralized, trusted institution. But as you said, Bo, that we don't need that anymore if we make use of this new technology. So we can use tokenized e-money on peer-to-peer decentralized networks, but the fact is that because we needed the old system, we have built enormous infrastructure of institutions, rules, system, surveillance, oversight, all to mitigate the risk of this very arrangement. That is, when we had no other option than to lend our digital money to a bank. So we had to build this infrastructure around the middlemen so it could be better trusted. So I'm wondering, what is holding us back to making use of this new technology, which was introduced in late 2008 and went live in 2009? Are we somehow hindered by our sophisticated infrastructure, complex systems and fancy institutions that we have developed?
I think that first of all, I think it's very important what you're saying about the central versus the decentralized model. And I think that we really need to discuss that, because what blockchain is introducing is a decentralized model. And as we haven't been, this is the first time that happens. So to most people, this discussion about centralization versus decentralization is extremely academic. We have to go into that discussion. We have to understand what is decentralization? What does it actually mean on a day-to-day basis? That is one thing. The other thing I would like to say is that if you look at the fiat money system, it's under huge strain right now, and it's probably never been under as much strain as it is right now. And if you look at the value of fiat money versus gold, for instance, since they dropped the gold standard, what you could argue is that fiat money has lost almost most of its nominal value, not nominal, no, most of its buying value. So I think that discussing all these things without actually discussing the situation that we're facing right now, discussing the politics behind this, I think that we are missing a very important part of one of the most important drivers of this technology, which is the dynamic between centralization and decentralization. And as we haven't had any global environment that allowed decentralization before we had the internet and the way it's been built over the last 35 years, then of course this is a new discussion. So I think it's very important to have that part of the discussion because it's a central element of the equation of what is going to happen going forward.
Yeah, thank you. So if we build on this, the dynamics between the centralized, shall we say, architecture and the decentralized architecture. CBDC, the central bank digital currency, is a very hot topic.
Yes.
A recent study by the Bank for International Settlement shows that now 80% of central banks are engaged in CBDC-related research, and almost 50% are running experiments or proofs of concept. And 10% of the surveyed central banks plan to introduce retail CBDC in the next 3 years. So if I now turn to Julio, which I know that have been thinking about this for many, many years, and big part, I guess, of the finality project is to build on this. First of all, could you please tell us the distinction, and for the audience, the distinction between wholesale and retail CBDC, and why this distinction is important, and also Since this is closely linked to, finality, as I said, could you please share with us, if you can, the status of the finality project?
Sure. So yeah, I do think the distinction is quite important, and it also fits into the previous discussion. So a wholesale CBDC is, let's call it a digital version of an RTGS system, right? It's a system that is built for banks. Whenever you try to send out payments through your old bank, the bank is going to have to send the money to the next bank, right? That will terminate the payment for you. Well, they need a place to transact, right? So they need to exchange the money between the institutions on behalf of the clients, which is you as sender, another one as receiver. Well, that can be done on a Vostra account, in one bank having an account on another bank, right? But it can also be done on an RTGS system, which is a system provided by the central bank. That's the basic function of the central bank systems, essentially to provide reserve accounts so banks can actually interact and can transact and settle their transactions there. Well, a wholesale CBDC is a digital version of that, right? Of course, today's systems at central banks, they're already digital. So we may want to be a little bit more specific than that. And probably what we mean by that is, an RTGS system that is built on decentralized technology. So it becomes programmable somehow, right? It's built with some sort of smart contracts, or at least something that provides some sort of programmability, right, to that system. And again, can be more accessible, more widely accessible because of the decentralization of the underlying network. All right. A retail CBDC is something different because wholesale CBDC, the only ones that can have wallets are the banks, which are the only ones that can access that system. It's an interbank system. Retail CBDCs, however, are something different, right? They're currency that is provided by the central bank in this case, but it's for final users, right? So imagine having your bank account instead of in a bank, right? You would have it directly on the central bank. Well, that would be a CBDC. Now, just to finish with the question in terms of finality, they have the original project was called the Utility Settlement Coin. We launched that when I was still at Santander. I previously spent about 11 years with Santander, and we launched it about 4 years ago. We spent a good 3 years, working with lawyers and supervisors and central banks to create the legal framework for that. And then finally, it was incorporated as a company in April last year with more than $60 million in funding from 16 banks, including Santander, my former employer, but also UBS and Bank of New York, all the Japanese mega banks, Barclays, ING, I mean, a lot of them. And since then, the company has been putting together all the team and all the resources. They have started all the technical development, which Adara is the main provider, as I explained before. And they are expecting very soon the first licenses from the first central banks. They said that they are focusing on the big currencies first. So that's dollars, euros, pounds, yens, and Canadian dollars. And they expect to have that ready quite quickly, actually by beginning of next year. They were saying the other day, right? I think, and going back to the why this is relevant to the debate, the considerations that you were saying before. It is true that technology allows new things, but we are. I mean, at sometimes, I don't know, we're talking about applying a new technology to the system we have, and I wonder if that is a good excuse, a good enough excuse to think about how to transform the very nature of money, right? You see, I would try to determine first, what are the root causes of the inefficiencies in today's world, right? What is that makes the system bad? Right? Because if what makes the system bad is the lack of this technology, so essentially today when you want to interface with banks, it's impossible, right? Because the APIs are not there. Even after the European directives, the FPD2 and all these things, right? PSD2 and all these things. It's difficult. Again, the systems have not been built to interact with each other. So they are very trust-based. It is true. It's very heavily leaning on trust, but also the cybersecurity considerations, all these things make them very, very heavy right? So it's very difficult to be interactive, and the system is very broken because the payments go, institution after institution, they go through batches. There's a lot of points where all these things can be broken. Now, that is a matter of not having decentralized technology, right, and being able to do it. Now that we have it, there is still at least chance or hope that maybe applying those things to the current regulatory framework with the current nature of money, right, we can make it work. That's what we are trying in the case of Adara, and Finality to a large extent is trying to do that, but at the very wholesale level. If we prove that that doesn't work, because the root cause of the problem is the very nature of money, this thing about banks creating money against credits, instead of central banks issuing the money directly as they do with physical notes, then yes, I mean, and definitely the considerations around what would happen if we change the nature of money and we go for central bank money, for example, or we go for stable coins or cryptocurrencies that are not backed by anyone, they're not redeemable, blah blah blah. All this is fascinating, right? All I'm saying is that maybe we should not write off the current financial system as it is today just because it's built on old technology, right? There is a possibility to actually reenact the whole system using new technology. At least we're exploring that idea, right? And see what happens. I mean, sometimes I don't know if we're talking about adopting this technology or completely reshuffling the very nature of money and trying to create a new system based on that, because that has a lot of risks as well. I'm not opposing, I'm not against it. All I'm saying is that it's not trivial at all.
Yeah, well, thank you. So I guess as a simplified version of this, with regards to wholesale CBDC, in some sense, I guess we can talk about that as a way to basically make the RTGS systems modern, shall we say, in a way, and we can improve that. But just a quick yes or no answer, Julio. Will we see retail CBDC in the next 3 years functioning in Europe or in any major economy? Yes or no?
I'll go with yes.
You got to yes. Well, that's interesting because there is a third alternative which has been discussed, which is the synthetic CBDC or SCBDC, which was initially put forward as a concept last year by the IMF economists Tobias Adrian and Tommaso Macchini Grifoli. And synthetic CBDC is about allowing licensed e-money issuers to do what they do best, that is to compete, to innovate in business and technology, but allow them to access central bank deposit facilities, which in their words, in the words of the authors of this paper, would make creation of central bank digital currency unnecessary. These are their words. So true or false, you're thinking about this. If I start with you, Dante.
Yeah, so look, I think in my own reflection and in the Libre project, we've said in the past that the advent of CBDCs is encouraging because it would enable us and other developers in the digital finance and movement of money world to do what we do best, to evolve in building on Bo's great points, what I call the 4 S's, and evolve around how people send, spend, save, and secure their money. And so in a world in which we don't have to be the money issuer, so to speak, for lack of a better term, and where central banks offer this optionality and plugging in, developing a private stablecoin becomes non-core. The other point I would make, and it's back to the philosophical aspects of our conversation today, is it really your money if you have to ask someone to spend it and if you have to pay someone to hold it? And as we've seen yet again in this crisis, as we saw in 2008, we're in a financial model where we privatize gain and we socialize losses. And so in a world in which these types of services are public utilities, shouldn't the people as a public good have basic access, basic control, and basic user direction in terms of how they mobilize their money and how they spend it? So right now we're living on not only borrowed time, but we're working with borrowed money in the system, and we have to figure out how to empower people more strategically.
Oh, thank you, Dante. Bo, you any comments to this synthetic CBDC? Is that the future, or
why make anything synthetic if you can make the real thing? So I think that it's only a matter of a very short time, and we will have functional CBDCs, and it's only a couple of years away.
Okay, Robert, your thinking on synthetic CBDC?
I think it won't change anything. Well, right now we are facing a situation when more money is being printed. The 2008 crisis and the rise of Bitcoin, well, it wasn't accidental, right? The financial system was failing. Bitcoin was created because of the enormous failure of the financial system. And well, if we debate about necessity of CBDC or whatsoever, it doesn't fix this system. It maintains status quo, in my opinion. So we need alternative, or we need a change. Nothing, you said that we have accepted this system. Did you accept anything? Has anyone asked you to accept it?
Well, it's a fair question.
Yeah, exactly. That's why I'm really excited about cryptocurrencies, because it provides alternative. It does not maintain status quo, but provides a real alternative to the financial system. And I hope people will be able to choose wisely, and we will be able to build it wisely as well.
I agree, and I think it's in everyone's advantage to basically have optionality. We have a system which is not perfect; it can be improved, and we have now a really exciting optionality of making things differently and making things more secure than before. But we have to do it in the right way, and then, as system architects, we would be thinking about in terms of layers when building solutions. A layered solution, or as bricks that are stacked on top of each other. So only when you have the first base brick in place, you can put the next one on top of that one. And in this way, we build the functionality that we're looking for. So if we look at the digital blueprint of Estonia as an example, where a digital identity is the base brick, and then on top of that base brick of digital identity comes digital data exchanges. And then once we have those two bricks in place, you can build on top of that digital payments. I mean, that is at least their philosophy. So I'm curious, is that a way to look at the way that we build this new blockchain-based future? Should we think about global cross-border payments in a similar way? And if so, what bricks are missing? Anyone?
The direction of travel is digital, and there is no question that as a condition precedent to be onboarded, you need access to the internet, and you need an internet-native form of identity and authentication. Without it, it will be very hard to overcome other obstacles that we have, such as KYC and compliance and a range of other issues.
Oh.
I absolutely agree with what Dante just said.
Okay, Julio, what bricks are needed?
I also agree. Okay. I think we will also need some of the stuff that we have today. I mean, we'll need wholesale actors like FX providers, like FX markets, all these things. I mean, there are some basic elements in the financial industry that will either need to cater to these new forms of money and access to money, or will have to be new. But in essence, they will have to do the same things as they are doing today. The topic of digital identity, I think, is particularly important. And also what Dante said about regulation and compliance and all that, right? I frankly don't believe in systems that take away the aspect of responsibility out of the equation, right? I mean, if people are not responsible for things, then I mean, in an ideal world, that would be wonderful, but the reality in Bitcoin is that 90% of the value is concentrated in like what, 50, 100 wallets?
Yeah.
Not much more than that. And people are using this for drug smuggling, for ransomware, for all these things. So actually the paper by the BIS, the last paper in the BIS on embedded regulation is very interesting. These forms of programmable money are programmable, and therefore they can have embedded regulation, right? In fact, regulators should be
yeah, we have to. So we're having
have
some
better ways to to do that. Then this would be
Julio, we have to stop it here. I think our time is almost up, and we should use this as a point of departure. Freedom and regulation goes, and freedom and responsibility goes hand in hand. And I would like to just thank you all for these amazing discussions that we have had about, you know, how tokenized money can and how it will change the global economy. I mean, we have had plenty of fantastic insight that you have provided, but there's a lot of things to be discussed further, and this discussion will continue. So I want to thank all of you, the panelists, for this conversation. I want to thank our prolific audience. We did not get to all of the questions to be included in my questions, but I tried my best. And I also like to thank the organizers for the event. So I say, stay safe, stay curious, and let's build a better decentralized future. Have a great day.
Thank you. Thank you so much, Jón, Robert, Julio, Dante, and Bo. Thank you.